Welcome back to Dummy Boy Finance. I'm Dummy Boy, and right now I want to talk about a SPAC play that has a lot of attention on it right now, and that is Lucid Motors potentially being acquired by Churchill Capital. And so that has been the talk of the town in the stock market community right now. And I want to go over a couple of things. I want to go over the chart, show you how the chart is looking on this one, and how to potentially play the hype on Churchill Capital stock right now. So before we get into the company itself, I just want to go over the chart quickly. So we're looking at CCIV on the 30-minute time frame. You can see we were up 14.66% on Friday, and this is the pattern that we have been trading in on CCIV. And so anytime there's been an interaction with this bottom line of support, it has been a buying opportunity, and right here this top line has been treated as a line of resistance. And so what do I believe is going to happen with this stock? If I look a little bit closer, it does look like we created a cup and a handle. And so usually what happens after this point is a substantial run up in share price. And so I would not be surprised come Monday or Tuesday if this stock actually explodes even further. And so what we're looking for with CCIV is if it breaks this top line of resistance, this thing is going to go absolutely nuts. And so that could be a potential trading opportunity for CCIV if you are looking to get into this stock for a quick play. And I say trading opportunity because I think it is way too early and way too speculative to have as an investment right now. We have seen extraordinary share price appreciation in the last little bit. And so these type of hype plays are not the best to invest in at first. You always want the hype to die down initially, but when there's hype, there are lots of trading opportunities. And just on a technical basis, we have this cup and handle coming in. We have a lot of eyes on this. And so watch this top line of resistance to see if we break. I personally do think we are going to run higher with this one. It just seems like there has been a lot of bullish momentum with this. So why did we see such a big share price jump in CCIV? Well, we had the CEO of the startup Lucid Motors go on CNBC, and anytime you go on CNBC, it is usually a nice little pump onto your stock the following day. In this case, it was to CCIV, as there are reported talks of an acquisition / merger in the works right now between Lucid and Churchill. And so there are a couple things that I want to mention while going through this article. And the first thing is just keywords and just honing on certain keywords that could be a little bit manipulating in a way. And so the first one here says we are aiming. So it's not that they have aimed or they have actually accomplished anything, they're planning to. And so that is always a deceptive little way for them to get investors on board onto their story. And so here they say they're in the luxury space. They don't see Tesla as a direct competitor. And so they have starting models at 70K and then higher models at 160. First thing I think about when I see these prices is that Tesla is the top dog in this market and they have trouble with the bottom line. And so if I'm looking at a startup that's trying to aim specifically for luxury and they have very high priced vehicles, their profit margins don't really look intriguing to me, and I haven't even looked at them. And so that is already one flag that I see. One thing this guy says right here, that as of right now, there's no deal in place between Lucid and Churchill Capital, and there may never be a deal. And so all of this hype is all speculative, and maybe there will be a deal, but as of right now there is not. So you have to play it very cautious with this one, and you always have to assume the worst with these type of plays. And if you're an investor in CCIV in hopes of that merger and it never happens, you're going to lose a lot of money. There's a common theme that happens with a lot of these plays. We see a huge run up in share price, then the news hits, they tank. A lot of investors lose their money. The people who traded it, they sold at the top. They then buy back at the bottom. They make another swing play, sell again. And the people who are holding the investment are called bag holders. And that is a common theme with a lot of these SPAC plays that have been coming up. And if we're looking at just Lucid Motors itself, they don't really have a diversified business model. And the reason I say that, I'm on Lucid Motors website right here. And so they have a frequently asked questions segment. And the first one is, what is their sales and service models? So they just sell vehicles directly to consumers. And so that is a pretty straightforward business model. And so Lucid Motors business model is quite linear. For comparing it to, let's say, a Workhorse, where you're getting contracts from a government company to create cars, that is obviously going to give you more business, and it's more concrete business because you know that those cars are going to be built and paid for. Whereas this business model is more of a hit or miss. If you want to buy it, you can, and we don't really know how many people are buying it. On the flip side, yes, Lucid Motors does have a linear business model, but they are backed by some pretty big money. And so right here on another article I'm looking at, if you read this again, they have those same deceptive words right here, like it says Lucid Motors sets out to create. Not that they have, they're going to. So that is a little bit nice little wordplay that they have here. Same thing right here, Lucid Motors plans to lead in his new era of mobility. So a lot of claims, a lot of propaganda, nothing really set in stone. So nothing really investment worthy. Right now it's an idea, and we have seen so many different SPAC plays come to the market. We've seen so many different EV plays come to the market. What makes you believe that this one is going to be better than the rest when we haven't even seen anything happen yet? And so maybe this thing does become one of the top dogs, but based on performance, based on what information we have right now, how can we say that this is going to succeed? And we can't say it, and that is why it's not an investment. It is a speculative play, and with this, it is a trading opportunity. Overall, the chart for CCIV looks pretty great. We have a cup and handle formed, could be explosive next week. On a long-term investment basis, probably not the best bet to hold this for the long term just yet. We need more concrete evidence. We need less speculation, more doing rather than planning on doing. And so again, don't get caught up in those keywords, because it is going to suck you into a story, which is all that it is right now. And so that is my quick little update on Churchill and Lucid Motors, because I know a lot of you guys are going to be watching this one coming next week, and a lot of you might trade and make a lot of money on this. So I wish you guys all the best. If you enjoyed this video, don't forget to like. If you got to this point, we are on that road to 10K subs, so feel free to hit that subscription button. This is Dummy Boy Finance. I'm Dummy Boy, and I'll see you guys in the next one.